Hi everyone, welcome back. In this lesson, we will focus on basic chart analysis and basic technical analysis. Here's an overview of the lesson. We'll first start off with an introduction to technical analysis, what it is, how to use it. We'll dive into price charts and how to read them, including the differences between line charts and candlestick charts. We'll go over trends and trend analysis and how to identify trends and spot trend reversals. And we'll also talk about price reversals, breakouts, and consolidation periods. So what is technical analysis? Technical analysis, or commonly referred to as TA, is the analysis of an asset's performance in a market over a given time. Basically, it's the study of price charts, and it aims to predict potential price market behavior, what could happen in the future, not necessarily what will happen. Remember, nobody knows what exactly will happen in the future. It's just a means of predicting what is most likely to happen based on previous market behavior. It's commonly and most likely is based on historical price action and volume of an asset. And it's used equally when trading stocks, commodities, and cryptocurrency. So TA focuses more on the assets trading technical information such as volume, percentage change, and price increases or decreases over a period of time versus the intrinsic value of the asset or the company. So TA doesn't necessarily factor in what the asset actually does, how well the company is performing, or if there is a news report about the asset's availability in a new market. It just focuses on just the price action and the patterns and trends involved and just the price charts. It doesn't even evaluate whether or not the company is beating earnings or increasing their revenue over a given of time, or if the cryptocurrency in our case is seeing more adoption and more use. It's just based on whether or not the price increases or decreases and other factors that you will see on a technical chart. So let's turn to next price action. So price action is the movement of an asset's price over a period of time. We can visualize this and interpret it using charts to map out that price change over any given time, whether it's years, months, days, hours, and so on. Now, traders use different styles of charts to analyze an asset's performance and improve their own ability to predict price action. Basic asset charts typically show line charts to display price action, but traders may choose to opt for other chart styles such as candlestick charts. This is something that you'll commonly see in maybe news articles or on the TV or mainstream financial news sources. They typically will show what's going on with the asset using just a basic line chart. But commonly traders and those who are looking for more information, they'll opt to other chart styles such as candlestick charts and more. Now, the benefit of this is in that analyzing price action data can be helpful when trying to find reason or order in what can sometimes appear as random price movement. What's going on with the asset? What's going on with Bitcoin? How can I figure out what Bitcoin could do in the future? Not necessarily what it will do, but at least with basic chart analysis and basic technical analysis, we can start to pinpoint and fine-tune our readings of the market. And the market will often give us suggestions as to what will happen next if we're looking carefully. So here's an example of a basic line chart. This is on TradingView. This is Bitcoin to US dollar, and this is the daily chart. So as you can see on this bottom line here, we have several days worth of time, and each one of these increments is worth a day's worth of price action over a period of time. And we can fairly easily track and see that, well, Bitcoin during this period, this was in late May into late June, this month-long period of 2021, Bitcoin was not doing well, right? Clearly, we see that the line is going downwards, indicating that the price is decreasing. Now, if we look at the same chart, the same set of information, but on a candlestick chart, as we see here, we still see the general arc of the candlesticks are lowering, right? Generally, we see that is some sort of descending pattern, but now we see a lot more information beyond just the line charts. We're starting to see different colors, start to see different lines and shapes. Let's dive a bit more into the differences between these two charts. First, we'll start off with line charts. So line charts are just a visual representation of an asset's price action. It's a single uninterrupted line used to display the asset's price movement based on the selected time frame. So if we select the daily, we see the price movement over a period of days. If we select maybe 1 hour, we'll see the price movement of the asset based on hours. Now, this is considered much more of a basic type of chart used in the financial space, as it only shows an asset's closing prices over time. It's considered clearer and much more simple, generally a more simplistic way of viewing the market, which is not inherently bad, depending on what you're using it for. Now, the main thing to keep in mind with line charts is that the closing price of the last transaction of an asset before the market closes for normal trading is what is factored into the line chart. Okay, so since in our case we are cryptocurrency traders, since cryptocurrency markets are open 24/7, it's agreed upon that the daily close is at 12 a.m. or 0000 UTC, basically the start of the new day. If you're living in the East Coast of the United States and you are in the Eastern Standard Time Zone, that would be about 7 p.m. And this will change depending on daylight savings time or no. So sometimes it will jump between 7 p.m. and then the other half of the year will be an 8 p.m. So that's something to keep in mind as well. Daylight savings time does affect the daily close for your specific time region. So what this basically means is that generally depends on what time interval you're displaying. So if your chart is focused on 1 hour intervals, it will show the closing prices for that asset every hour. So let's say at 1 o'clock, Bitcoin was at 34,000. And then at 2 o'clock, Bitcoin was at 33,800. We'll see a decrease, right? The line would indicate at 1 o'clock, it was at 34,000, and then at 2 o'clock it decreased to 33,500, and it will mainly just focus on those closing prices for those time periods. So if you're focused on days, it'll show the closing price of the day at on a daily basis of Bitcoin. If you're doing it on the 4-hour chart, it'll show the closing price of Bitcoin every 4 hours. If you're doing it on the 15-minute, it'll show the closing price every 15 minutes. So here's an example. If you're using TradingView or any charting platform program, you'll see options to change the time frames of your chart. Typically on TradingView, this is on the top left. Here we see a variety of options: the 1 minute, 5 minute, 30, 1 hour, 4 hour, daily, weekly. In this case, we have selected daily. So here we see these lines are depicting the closing price of Bitcoin on a daily basis. So here we see pretty much from early May into June and going into July, this was clearly a downward fall in prices, right? Bitcoin was closing at about 59,000 and then would gradually deteriorate over the course of May into the 30,000s, right? At the time of this picture, we saw that Bitcoin was currently at $36,000. So that was a significant decrease, and the line chart clearly shows that. Now, if we were to turn to the hourly chart and select 1 hour, here we see Bitcoin to the US dollar. We see the closing prices of Bitcoin every hour. And this paints a different picture, because now here we see this was at around late June. We see Bitcoin was actually recovering in prices. So now we see a different picture from the daily, which was clearly showing downward, and the hourly, which is showing some sort of upward movement. Right? Now, that's something to keep in mind as far as using different time frames will show different perspectives. And we'll talk a lot more about time frames. Be sure to check out our time frames lesson in the lesson package. Now, there are several advantages to line charts. So it can be useful when trying to show a clear visual of how the price of an asset has changed over a period of time. Since the line charts only display closing prices, the line charts reduce the amount of information shown compared to other chart styles such as candlestick charts, where that will show a lot more information. And it could be considered visual cluttering. If you need to make a clear point or show a clear progression in price, line charts can easily do that. Can also help traders clearly identify patterns and trends in a price action. As we saw in the daily Bitcoin chart, it was pretty clear and obvious that Bitcoin was losing value from mid-May into June of 2021. And we also saw on the hourly that towards late June, Bitcoin was possibly showing some sort of recovery. Prices were reversing and moving to the upside. So there we see some sort of disagreement between the two time frames, but there we see, based on each of those time frames, we saw a clear trend and a clear pattern. Now, their simplicity can help beginners develop their chart reading skills before moving on to more advanced charting styles such as candlestick patterns. I still occasionally look at them depending on the reasoning. I do find them very useful, particularly for comparing the price action between two different assets. If we take a look in this slide, here we see a comparison between Bitcoin on the daily chart, Bitcoin to the US dollar, and this is the blue line as we see here, and Ethereum to the US dollar in the orange line. And here we see we can actually, at least on TradingView, I'm sure on other charting platforms as well, you can impose another chart on a chart. That way you can compare their price movement, and you can vary this based on the percentage gain or the valuation gain. Here we see the general price arc of Ethereum laid on top of the price chart of Bitcoin. So we can really pinpoint exactly when each one peaked, and if there were different peaks, if particularly one asset had much more price movement or in a certain direction, or maybe there was conflicting price movement where as one was going up, another one was going down. We do see that in early May, where Ethereum was still holding on and pushing, reaching new all-time highs of about 4,300 at the same time that Bitcoin failed to really recapture the 60,000 level over here and would decline into the low 30s, right, and continue that trend. So this is useful, and this is useful not only for crypto to crypto comparisons, but also crypto to stock, crypto to traditional equities or commodities. For more information on correlations, be sure to check out our lesson on crypto to traditional correlations as well. Now, there are some disadvantages to line charts we want to mention. They may not provide enough information for some traders. So lines don't inform you what happened throughout the time period selected. only what the closing price of the asset was. So we don't know what exactly happened to Bitcoin during that day. If we're looking at the daily chart and it's pointing this downward picture, we don't know what happened throughout the day. The day is a long period of time. It's 24 hours in a day, and a lot can happen, a lot can change in regards to the price action of Bitcoin and in trading. Remember, cryptocurrency is a daily market. It's a global market. It's 24 hours, 7 days a week. It doesn't stop for holidays, similar to traditional stock exchanges do, right? It doesn't follow banking hours. So sometimes line charts can leave out information and it can be overly simplistic. Now, some users rely on more data than just closing prices, such as the open price, the highest price of the selected time period, and the lowest price of the selected time period. This is really where candlesticks begin to shine, because now we can start to pinpoint all these different factors of what happened in that time period.